Now, more tax tips from Manjit Singh CPA and Kusum Ramachandran.
Good morning, ladies and gentlemen. This is Manjit Singh CPA from Falls Church, Virginia, and with offices in Ashburn and Manassas. Kusum and I are here today, and there's something very interesting that is going on in the world of taxation. As you all know, the Commissioner of Internal Revenue Service, Doug Shulman, is aggressively going after several fronts. One is the bad tax preparer. The other one is the offshore voluntary disclosure initiatives that we have talked so many times, and I'm not going to bore you with that today. And the third issue is trying to do a lot of audits to catch people who are cheating on their tax returns. Kusum, about last Tuesday, if I remember correctly, there was a news article in the Accountant's Journal that the Supreme Court came down with a decision about deportation of people who are doing false tax returns.
Yes, that's the most recent decision out of the Supreme Court, and the justices in the majority managed to argue that I think it started out with a Japanese couple who had filed a false tax return. In other words, they were able to make in the lower courts the case that there was willful negligence in regards to this tax return, and then the case went all the way up to the Supreme Court, and the Supreme Court agreed with the lower courts and said that they could be deported. When you file a U.S. tax return, if you file the 1040, it means that you agree to disclose your total worldwide income. A lot of taxpayers do not realize that that is what they are supposed to do. They want to file the 1040. They want to get the benefit of the deductions, the exemptions, the tax credits, but they do not want to disclose their total worldwide income, but every tax return is signed under penalties of perjury, and if taking the position that we didn't know, or that we didn't realize this was what the tax preparer has done, is not an excuse. You are supposed to review your tax return and then only sign it, and if you don't, well, you could even get deported, I guess, after this case. So it's very important to reveal your total worldwide income, to not make any false statements, claim false expenses, include items that exclude items that should be included, include items that should not be included. In other words, I guess there's no substitute for a good professional. You should get your tax returns prepared and reviewed, especially if you have complex issues. Go to a competent professional so that you won't be deported, I guess. And also, the professional also stands to lose something, his license.
Thank you very much, Kusum. Yes, folks, there have been instances in the past where individuals have come forward, gotten tax returns prepared, and professionals are aware or not aware. We as the professional ourselves needs to be very, very careful about this, is that whatever information we are putting on the tax return also has some extent of penalty of perjury, that what I am aware of is putting in the return to be accurate or not. In the past, the IRS had tried to emphasize on the professionals that they should be examining the documents for putting a deduction on the tax return, and the CPA professionals kind of balked at that requirement that we are not auditing the taxpayers. It's the IRS responsibility to audit the taxpayers. At the same time, the professional has to exercise his due diligence under the codes before they get hit with the negligence penalty of aiding and abetting in preparing a false tax return. The Supreme Court decision that Kusum and I are talking about had clearly said that even the preparer is subject to deportation, especially if he is not a U.S. citizen, he is a green card holder or on an H-1B visa. Having said this, ladies and gentlemen, when you come or go to your tax preparer to get your returns done, please be reasonable, honest, and truthful, and don't expect any favors out of the ordinary. It is his job to prepare your return accurately, to protect his own interest as well as to protect your interest as well. Having said this, we shall talk more about another issue, and that is per diem requirements. Kusum, today we had a client who was asking me a question on the per diem issues. The individual is here, is a resident of Virginia, going to work in Atlanta, and they are working on a quarter-to-quarter based contract. Can we help this taxpayer by paying some per diem for living in Atlanta?
Yes, I mean, companies do compensate their employees for temporary assignments by providing them a per diem amount for their lodging and meals and incidental expenses when the assignment is temporary. But basically, the key word is temporary, and we have taken it in many cases out of tax court. Temporary has meant less than 1 year, so that if you find that the contract keeps getting extended and eventually exceeds 1 year, then the requirement is that all that you have paid to the employee as per diem now has to be recaptured and reclassified as payroll. Sometimes it may span 2 years. It may be that you paid part of the per diem in 2011 and part of it in 2012, and then by, let's say, July of 2012, the assignment had exceeded a year. You would have to give such an employee a W-2C for the prior year. And we have seen this a few times in our offices ourselves, where the employee all of a sudden receives a W-2C where the gross wages have gone up by a significant sum because all their per diem reimbursements have now been termed regular wages.
So for the employers who are trying to cut corners by converting or not paying wages and paying per diem instead, please be careful that if the assignment exceeds 11 months, instead of lene ke dene na pad jaye. Having said this, folks, this is Manjit Singh for this week.
And I'm Kusum. Thanks for watching.